Hello, everyone. I'm Adrian Leeds, and I'd like to welcome you to the second quarter North American Expats in France Financial Forum. I know that's a mouthful. We have a mouthful to talk about tonight because we're going to talk about inheritance taxes in France, how to minimize or eliminate them for your heirs. This is a complicated subject, and that is the reason that we have so many fabulous panelists with us today. So Brian, if you want to go to the next slide, I'll introduce you all. So our panelists are Benjamin Pik with Pik Consulting, CPA and Expert Comptable. So yeah, Benjamin, give us a wave so we can see who you are. There you go. And Brian Dunhill, of course, with Dunhill Financial, who is my cohort in crime on these forums. Brian is with Dunhill Financial, and he's going to be talking about some really interesting topics tonight, such as assurance vie and some other things. And then we've got Jonathan Hadida, who is a tax advisor and attorney. Jonathan, thank you for being with us. And of course, myself. And you might see Patty Sadowskis there. Patty is our co-host for the evening, so she's going to be monitoring your questions and other things. And let me give you, before we get started, let me give you the housekeeping rules. First of all, we are recording this session, and we're going to make this available, so you're going to be able to listen to it again later or even pass it on to your friends. Don't worry about that. So you don't have to take, copious notes. While you're listening, just stay muted. When we go to the Q&A at the end of the session, you'll have a chance to actually ask your questions, but for now, just stay muted. And if you want, go ahead and put your questions in the chat box. We're going to be monitoring that so that we're going to try to answer as many questions as we possibly can before we sign off. And please keep your questions on topic and try to make them not very personal so that they're a little more general. If you get into personal questions, we'll just have to see you on an individual basis, which will just be fine. So on that note, I think we're going to start this off with Jonathan Hadida. And Jonathan, let's go to the next slide. You're going to be talking about estate and gift taxes on the US side.
Perfect. Thank you so much, Adrian. Thank you, Brian. Thank you guys for having me tonight. It's an honor to be speaking here today. So, estate taxes from the U.S. side. The U.S., compared to what Benjamin's about to talk about on France, is a walk in the park. The U.S. estate rules are quite liberal in that they give you an exclusion, an exemption for $12.06 million for 2022. Of estate. So if your estate is below the $12 million range, you do not pay any estate tax. If your estate is over the $12 million, that's when you start paying estate tax up to a rate of 40%. Okay, so it's 12 million, and that's 12 million per individual. So if you and your spouse combined have a $24 million exclusion on your estate. So that's, again, a big number and a big gap before you have to pay estate taxes in the US. Additionally, when we talk about estate taxes, we also talk about gifting. So when we're talking about gifting, we talk about gift tax exemptions. The gift tax exemption from a US perspective is $16,000 per person per year. Now, what does that mean? That means that if I want to give money to my brother-in-law or to my father, I can give him or her $16,000. If my wife gives $16,000 as well, we can both give $32,000. So therefore, if you plan it right, you can give up to, as a married couple can give up to $32,000 to a child in a year. If that child is married, can give up to $64,000, and so on and so on. And again, this is without paying any gift tax, any US gift tax. So proper planning when it comes to gifting and estate planning, and that's what we're going to talk about, especially coming to France, is imperative, okay? Because the most important thing you can do when planning for estate and gift taxes is plan before. If you're still in the States, this is the time to start thinking about estate planning and gifting if you're going to move to France. Because once you've come to France, the laws, as Benjamin's going to talk about, are much, much more severe and are far, far more onerous and start at a much lower threshold. So therefore, proper gifting and proper planning now is going to be important. So gift tax exemption, $32,000 for a married couple to a person, $16,000 per person. Estate tax, $12 million. So both of those combined help us as U.S. persons avoid any estate taxes. Now, if we're over that, we'll pay estate taxes. Additionally,
that's an annual rate though, right?
Yes, ma'am. Oh, sorry. The gift tax is an annual rate, is $16,000 per year. So you can give $16,000 this year, $16,000 next year. One thing I like to do with my clients, if they're looking at near the end of the year to give a big sum of money, is give a part now, a part the next year. A part, you know, if you can give a part in November and a part on January 2nd, you can double up. So yes, it is an annual rate. And the estate tax exemption, if we could die more than once, Adrian, that would be great. But unfortunately, we only die once. So our estate tax exemption is only one time in life.
No, but that depends on if you believe you actually live many lives. So
yes, there
you
you
can
go.
die
There
more than
you
once.
are. there you are. But in this life, in this one life that we're living, it's a one-shot deal. Other things to note from a U.S. perspective, and we'll touch on these probably in the Q&A and various times, is if you're not a U.S. person. So if you're not a U.S. person and you have U.S. situs assets, it is imperative to plan properly because, again, the U.S. has estate limits and they are not as generous for non-Americans. A non-American.
Can I slow you down there, Jonathan? Just one second.
Yeah,
I think a lot of people are not going to know exactly what you mean by a U.S. situs asset.
What's
you define that, if you don't mind.
So U.S. situs asset. A U.S. situs asset is an asset which is located in the U.S. So the main two that we're going to talk about, and the main two that really matter for most people, are real estate. So I had a house in Phoenix, Arizona. That is U.S. situs assets. Okay. Secondly is stocks, U.S. corporate stocks and bonds. So stocks in Coca-Cola, Pepsi are included in U.S. situs assets. Okay, and this is the big one, especially considering stocks are very portable. So if you hold U.S. stocks in a U.S. account, when you die, you may be subject to U.S. estate tax. And this is subject to an exemption limit of only $60,000. So it's much lower and much quicker, comes into play much quicker. You know, Brian's sitting there saying, oh, my clients have this. Basically, this is probably a big thing for almost all of Brian's clients. So you need to keep in mind, if you are investing in U.S. domestic stock, you may have estate tax issues. And now there are various ways to minimize that. The best one is, if you know the day you're going to die, sell all your U.S. stock, get the money out the day before you're going to die. But since none of us know which day we're going to die, we unfortunately can't plan do such planning. Okay. So again, U.S. sourced, U.S. situs assets may lead to U.S. estate tax issues as well. Okay. So it's something important just to take note of.
I just want to clarify that when you're dead, and it's the heirs that will bear the brunt of the taxes. Okay, let's just clarify this right now.
To be honest with you, in some cases, you'll be happy you're dead because your heirs are going to be so upset with you for doing bad planning. So, you know, it's one of those things you want to keep your reputation going well with your heirs when you pass. So proper planning ahead of time will be imperative.
Or you can go the other route and just go with Perkins' philosophy of die with zero. That's another way that you can do it.
That is another way.
I agree with that.
You know, use it for a nice party. I hear Benjamin was telling me that Tel Aviv's got a great party probably going to happen tonight. So, you know, if we all want to take a plane to Tel Aviv, we can all go have a nice party in Tel Aviv potentially. But yeah, so the main key issues to take note of as U.S. persons, from a U.S. perspective, the gift tax limit, the estate tax limits. As non-Americans, if you have assets in the States, you may have US estate tax issues upon, well, not you, your heirs will have may have estate tax issues when you die. So you want to make sure that you do proper planning. And the last thing, and the thing that when Benjamin starts talking, I will jump in over and over is to tell you is plan before you come to France. The US rules are lenient compared to France. France is far more onerous, especially even with transfers between spouses, not between spouses, but between heirs. So if you want to give money to your children, you know, if Adrian decides she wants to give money to her daughter, for her daughter to go out and buy a nice boat so she can go on a marina, she can only do it up to 100,000 euro. So, you know, again, Adrian's daughter is going to want a lot more money than that for her nice boat. As you can imagine, you should see Adrian's boat. So basically, you know, if you could do this planning before, it is imperative. So that's the US side. Now, as I preface the fun stuff, the French side of the coin, I'm going to turn to Benjamin, who's going to walk us through the French tax implications of, you know, transferring and dying in France.
Uh-oh, here we go. Fun and games. Benjamin, you're up.
Thank you, Jonathan, and thank you everyone for having me tonight. Yeah, so the French estate and gift tax is very complicated. It's a very complicated topic. So I try to separate it into different small topics to make sure you understand all the things you need to be done before you move to France, all the planning you need to be done, and to make sure you understand the main rules. So tonight we're going to speak about the first. I'm going to give few definition of the gift, of the donation, or what's called the donation in France. I'm going to speak about the residency, and I'm going to speak because depending on the residency, your tax liability are going to change. We're going to speak about the allowance. There is the rules for the allowance are just a nightmare. Depending of each situation, the allowance is different. And then we're going to speak about the real estate planning because this is a very important topic. If you own a property in the US, for example, and you move to France and you want to give your property to your dependents, it's very important to know how it works. So maybe let's start with the first slide, Brian. So first, I'm going to give you few definition of the gift in France. So gift is donation in France, and the French gift tax is called droit de donation. So it's words that you will necessarily understand when you try to give when you're going to start in a process of a donation in France. Basically, it's deal with the transfer of a property to one person to the other. So it really needs to be a transfer, and it needs to be from an existing asset, cash, property, whatever you have in mind. It needs to be an existing asset. So any promise to give something is not considered as a gift in France. So gift may be formed in cash, goods, only need to be a transfer from one person to the other. A very important thing to understand when it comes to estates and gift tax in France is the residency. So the residency depends on the situation of the tax residency of the donor, the tax situation of the tax residency of the donee, and the nature of the gift and the location of the gift. So basically, we have three main options when it comes to the residency. So first, if the donor is a tax resident in France, his liability arises to the worldwide asset is going to transfer to his donee. If the donor is non-resident, the liability arises on the worldwide assets to the donee only if the donee has been tax resident in France for the last 6 years out of 10 years. Lastly, if the donor is not a non-resident in France, the liability arises only on the gift of real estate in France. So if you have asset in the US, it doesn't into consideration of the estate planning. We spoke on a different webinar about what is called the tax resident in France. So this is again it's a specific topic aside the gift tax. But basically, there is three reasons that make you a French tax resident. It's personal interest, economic interest, and Jonathan, help me for the last one. I forgot.
Okay, Benjamin. Let me I just want to go over this myself because, you know, I have my own personal situation. So I want to make sure I understand this, okay? If you as the donor, if you're tax resident in France, regardless of where your assets are, worldwide, the inheritance taxes are going to apply to everything, correct? Okay, so regardless of whether I have a company or a property in the US, it doesn't matter because I live in France, it's going to apply to everything, correct?
Correct.
Okay, if I am not tax resident in France, but I own a property here and I gift, okay, the property to someone in the US, for example, then the only thing, okay, the only inheritance tax would be on whatever property I own in France.
Exactly.
Right? Not property I owned in the US.
Right.
Okay, but if I'm not tax resident in France, right? But I own property in France, but I give it to someone who is resident in France, then they will pay the tax.
Yes.
Okay. So it's complicated as usual. Everything in France is complicated.
It's very complicated, and each situation is different because first we need to define the tax residency of each percent for the last 10 years. For example, in the case the donor is non-resident, so each year it's an own assessment, and depending on the assessments, you fall into one of the category.
Okay. Okay. Sorry to interrupt. I just wanted to clarify that.
It's perfect. So now we're going to speak about the tax allowance in France. Brian, if you can go to the next slide. So the rules in France, the basic rules is a gift made every 15 years. It's free of gift tax, provided it does not exceed the exemption limits. We're going to go through the exemption limits, but basically every 15 years you can make a free gift tax up to an allowance. However, if the donor passed away before the 15 years, it can go to the estate when you're going to calculate the estate on the taxable base of the estate. It can come into the balance. So it's basically 15 years, but there is exception. So there is few threshold. Basically, the threshold are the same for gift and estate for an inheritance, except for the spouse and partners. We're going to come back on that point because it's very important. There is no inheritance tax between spouse of partners, but there is an allowance of $80,000 between spouse of partners for a gift. So if I want to give a gift to my wife, I can give up a gift free of tax up to $80,000. And if, for example, if I'm giving her $100,000, there will be $20,000 of taxable gift. But in case I'm passing away, the full amount of my donation of my estate is free of tax. For the children, it's 100,000 per parent and for each child. For grandchildren, it's 31,000. For brother and sister, it's 15,000. For niece and nephews, there is 7,000. And there is exemption all the time. So this is just like rough numbers of 2022. But there is exemption, for example, in case of disabled person and stuff like that. And the threshold are changing all the time. And also, please note that it's cumulative. So, for example, I can get 100 for my parents, for each of my parents. So I can get $200,000 of cash free of tax.
So the further down in the family chain you are, the more tax you pay.
Exactly.
And if you go to the fourth degree, it's basically 1,500 euros. So basically, if you want to give to your gardener, you're really not getting any exemption.
Because we're going to see on the next slide, but there is, in addition of the allowance, there is a taxable rate with increasing depending the less related you are, the more tax you're going to pay.
So it's not just how much money you give in France, it's also to who you give and how close they are in proximity to you. Mm-hmm. So, you know, your cousin may be like your brother, but he's not your brother for tax purposes.
And again, this is very like general, don't take these numbers as granted because it's changing every year and the rules are changing all the time. There is a tons of exceptions. It's basically the main idea of how it works. There is threshold. Up to this amount, it's free of tax, and above this amount, you start paying the estate or the gift tax in France. And for the spouse, it's the difference. For inheritance, it's free of tax, and for gift, you can give up to 80,000 free of tax. Obviously, it's the donee who is liable to pay this tax. But in some case, and we have some clients like that, with the donor who wants to pay basically the tax for that, and is not affecting the level of the gift. So this is a good option if someone wants to give you someone wants to give you a gift, it's a good option if he's also paying for the tax of the gift you're gonna receive. So now we're gonna speak about the rate of the French gift tax, which is also the same for inheritance. So again, if the value of the gift is larger than the allowance, you're gonna start paying the tax on that. One thing I didn't precise, which is very important, is when for example, I'm giving a property of $400,000, but I have $20,000 of debt. The taxable asset, the taxable base, will be the net asset value. If, for example, I'm giving a bank account, let's say, when I have a debit, when I have a loan on that, it's a net value. So any debt you have on the asset needs to be decreased on the taxable base. So the rate depends of the relationship between the donor and the donee, and it's a progressive rate. So I'm not gonna read all the rates, but for example, between married couple and civil partnership, it's exempt of paying inheritance tax in France. We just discussed that before. But on the gift, it's up to $80,000, 80,000 euros. And then there is a progressive rate between 5% to 45% between parents and children. The more you give, obviously, the more tax you're going to pay, but it's progressive. So you need to calculate for each amount of the range. Between a married couple and civil partners, between 5% and 45%. And they give between brother and sister also, there is a different rate for that. If you want to give a gift to friends or to unrelated family persons, the rate is 55%, and outside the family, it's 60%. Again, the rates are the rate from today, not necessarily the rate of tomorrow.
Well, yes, because Macron has already alluded to the idea of reforming these laws and rates, right?
Yes, it's been a few years. They want to change the rules of the estate planning in France because it's a very a nightmare for everyone. And but the rules didn't. I mean, it's supposed to be changed and to be less complicated, but it's not acted yet to the. It's still on discussion. So hopefully, in the next 5 years, he has 5 years to work on that. So hopefully, by 5 years, it's going to be easier than today.
Well, I mean, what's shocking to me is the difference between the US allowance of more than 12 million compared to, there's really very little grace in France. I mean, for a child, it's what, 100,000?
Yeah. This is why it's so important, Adrian, to plan ahead. Is before you come to France, you have to plan. It's proper planning before coming to France, because again, once you're in France, you can only give your children 100,000 per 15 years, not per year, per 15 years. So it's quite a harsh system that France has in place. And as Benjamin said, they are looking to reform it and hopefully make it easier and better. But as with everything in life, until it happens, we can just wait and see.
And the worst for the 15 years, that if you passed away before the 15 years, the money you give is going to the inheritance package. So it's not like a rollover every 15 years. I mean, if you passed away after 14 years, just missing 1 year to be free of tax, it's going to the estate of the donee. So it's kind of complicated, yes.
Kind of complicated, but if it's not in France, if it's not complicated, it's not fun. So yeah. this is what keeps us going, is all this complication. Okay, Benjamin, you have more to talk about?
Yeah. So if you can go to the next slide, perfect. So now I'm going to talk about the giving a real estate in France, which is very interesting and very also important to plan before. I think, Brian, you're going to talk about the user-free later on, so I'm just going to be brief on that type of aspect. So basically, not of the case when you try to plan your estates, you just want to give your property to your dependents, to your children, so or to friends or whatever. So there is a way to calculate the interest value of the property, because you not necessarily give the full property to someone. You can divide the property basically by interest value. You have three types of interest value. You have the new propriété, which is basically a grant of owning the property without the right to use it. So, for example, you want to give the property to your kids, a new propriété, but you want to live in the property until you die. you can give the property in a new propriété to your kids and still living in the property, or you can take rental income from that and living out of the rental income on that, but the kids are only going to receive the freehold of the property. So that's the first interest value of the property. Then we have the usufruit. Basically, the usufruit is the right to use the property and to enjoy the revenue of it without the right to destroy it or to sell it. You just basically benefit of the activity of this property, the rental income, or just living it, but you can't sell it. And then the plein propriété, it's basically the freehold ownership of user property. You both own the property, fully own the property, and you can benefit from the property. So I know it's kind of a complicated topic, but it's important to know that there is few ways to planning by knowing that, because the rules are there is good advantage of giving your property to your heirs by using this type of interest value. If you can move on of this, thank you. So because when you do that, when you change you don't give the full value of the property, you just give the usufruit or the new propriété. There is an allowance that enables you to reduce the taxable estate rate of the property. I'm just going to give an example. It's going to be more easy to understand. Let's say a mother age of 70 years gives property to a daughter with a freehold value of the property being 150,000 euros.
Oh, that must be me. No,
Yeah.
I'm just joking. I'm just joking. I'm not that old.
So there is a value which is decreased by you have a table with all the rates. So for example, l'âge de l'usufruitier, age of the usufruitier is 75. So the value of the old usufruit will be 30%, and the value of the new propriété will be 70%, which is this line. So two options. If you just give the gift to your child without using the real estate planning, without doing estate planning, basically you are going to give an allowance of $100,000 euros will be free of tax. We just saw at the beginning like the allowance, and the rest will be subject to estate tax, and you will pay approximately 8,000 euros of estate tax on that. But if you're using the usufruit, the interest value of the property, you give the new propriété to the daughter, and you keep the usufruit. Basically, you're going to assess the value of the property of 105 because you're reducing the property by 30%. And after the deduction of the gift tax allowance, you only gift estate will be based on 5,000 euros. So you're going to say, okay, it's not a big, okay, it's not the saving of the world, but it's a nice allowance. But the good side of doing that, it's on the death of the donor, the freehold interest of the property is automatically transferred to the recipient without the need to pay any inheritance tax. So basically, you're dividing the property by interest value. You just give part of the property to your children. So you're reducing your taxable base, and the rest, when you're going to pass away, is going to be free of tax. So this is something very, very interesting.
Do you have to set that up though when you're purchasing the property?
No, you can set that up at any point. At any point, you just have to work with your notaire to do the transfer. And again, as Benjamin alluded to, depending on your age, there are different abatements. You know, if you're less than 21 years old and you want to give something usufruit to someone, hey, you get they'll only pay 10% of tax on it, a gift tax on 10% of it. Again, you know, doing it as soon as possible and proper planning is the key. And that's basically why, again, you know, if you're, you know, turning 41 next year and you're in your 40s, you might want to think about giving stuff to your kids now or in your 50s, etc. The older you get, unfortunately, the less benefit you get from this usufruit, because unfortunately, you're, you know, in the French tax legislation's eyes, you're going to die sooner.
Uh-oh, I'm about to go into a different tax bracket.
We know, Adrian, but you're going up to, that's why I used the 40 example.
That's why we're doing this. Shocking.
But
Okay.
Adrian, could you tell us about SCIs?
Yeah, I'm going to talk about SCIs. Well, it is certainly one way that you can avoid creating, inheritance taxes. And SCI is, the SCI stands for Société Civile Immobilière. It's basically a fiscally transparent company. It's a French company that's specific to this idea, and I believe that that's why it was created to begin with. And it's a way of two or more entities owning one property with shares which are then valued. Okay, so it is a way to kind of manage and pass on your family assets, and a way of optimizing your inheritance tax for inheritance tax purposes. And what happens is that the shares of the SCI are then passed to the children and grandchildren, but not actually the real estate, which in itself has certain tax advantages. And I know that Jonathan and Benjamin, you can both talk to that even a little bit more, because the company itself is always worth a little bit less than the sum of its total assets. So it is a way of controlling your inheritance tax. It's also a way of kind of managing conflicts between people, because you have to make certain decisions about the property, all the members of the SCI. And there is a manager called a gérant who is appointed, and that manager has, quite a lot of responsibility, but that manager cannot actually sell the asset without the other members of the SCI's permission. So it's not like they have total control over the property. There are, unfortunately, some disadvantages to this. And so this is why I want our clients to really take a good hard look at creating an SCI before they do it, because it sounds like a perfect situation where, for instance, you could, say you buy a property, but you put half the shares in the names of your kids so that your kids aren't going to pay inheritance tax on their shares. But, it costs a few €1,000s to create the SCI. It takes a little bit of time. You have to run it like a company, so you have to hold meetings. You have to have pretty good accounting on it. If you rent this property, then it could be subject to corporate taxes, because it is a company. And I believe the tax is like 3% annual, just, on income on it. And then if you want to transfer the shares between people, then you're going to pay the notarial taxes and fees again on the shares that you transfer. So like in the case of a couple who have, they've bought it together as an SCI and then they get divorced, then when one spouse buys the other spouse's shares, then they have to pay the transfer taxes and fees. So it's not always a great solution, but, if you're purchasing a property with several people, like friends, for example, or relatives, then I would definitely recommend creating an SCI so that you can have, these shares as part of your asset. And if you have a complicated marital situation, like ex-husbands, ex-wives, kids from different marriages, then I definitely would recommend doing it, because then you have a way of controlling the inheritance. And it is definitely a way of your kids inheriting at least the shares that they own without any inheritance tax. So it has its pluses and minuses, that's for sure. There is Patty, if you could put a link in the chat, there is an official pamphlet that the Chambre de Notaires publishes about the SCI. It's in French, I'm sorry to say, but it is a PDF that you can download, and it gives you quite a bit of information. Patty, you've got that link you can put in? So we do this all the time. We create the SCI for people all the time. But again, it is something to think about, the pluses and minuses and whether it's really going to work or not. And especially if you're going to rent the property, it could be a pretty bad idea. Anybody want to add to what I've had to say?
I think that's a beautiful summary.
From a U.S. perspective, Adrian, the only thing I just wanted to add was that SCIs are generally treated as partnerships. So it generally will potentially be a foreign partnership. with all the filing that will go with it if you're renting out the property. If you're just owning it for your own personal use, then there's no filings. But again, if you are renting it in an SCI, it would potentially be a partnership return because, as Adrian said, it's usually held with family members. So
now, okay, so Benjamin, I know that you have to turn in a tax return at least the first year, correct?
Yes. Even, I mean, I'm always filing returns even for the years after, because in case of consistency, or if you want to sell the property, it's always good to have returns on the SCI.
Okay, so you have to file your tax return for the SCI at least the first year if you're not generating any income. And if you are generating income, then you have to file it annually, correct?
Exactly.
Okay. Okay. So you want to, Brian, you want to hear about viages? Because that's another way.
I would love to hear about viages.
Oh, viages are amazing, you know, because I used to own a viage, which I'll talk about a little bit. The word viage comes from the word viage, which means duration of life. And it's basically a life annuity property. And I think it's really, it's a fascinating concept here in France because in effect, you're betting on the seller's death, which is kind of a weird and morbid thing. But in essence, this is where an elderly person can actually sell their property during their lifetime, but hold the rights of usage until their death. And the person who's buying this property can really buy it at a bargain, at a reduced price. Because what they do is they pay what's called a bouquet, which is like a down payment. And then they make these monthly annuity payments to the viager, the person who's still living in it, until their death. And so that's why it's kind of like, you know, betting on their death. But once they die, then it becomes totally yours. Now, you might know about the very famous case of Madame Jeanne Calment, who was at the time the oldest woman who ever lived, to the age of 122. She was French. She lived in Arles, and she sold her property to her notaire, who was 43 years less than she was at the time. She was 90 years old, okay? He was 43 years younger. He thought, man, this is a great deal. I'm going to buy this apartment of hers in Arles, and she's going to die in a few years, and it's all going to be hunky-dory. Well, then she lived to be 122, and his monthly stipend was 2,500 French francs at the time, a month. And in the end, of course, he died before she did. His whole family died before she did. And they ended up having to cough up like more than double the value of the property to her. So it's a very famous case. She's no longer the oldest living person because, well, she died. It is another French woman, by the way, a woman named Lucille Rondon, who was a French nun. And she's 118. Currently, so that's just a small aside. But what's interesting about buying a viager is that you don't buy it based on the actual market value. It's calculated based on the age of the seller, and which is known as the occupied value. And but it is, you know, a way of acquiring something at a bargain. I also think of it as a way of like getting a mortgage, because if you can't get a mortgage in France, this is like a down payment and then a monthly payment. So it's similar to a mortgage. And should you default on the mortgage, then the property goes back to the hands of the viager and you lose out, just like the bank. So it can be a pretty interesting idea, because especially there is such a thing as a viager libre, meaning that the viager is not being occupied by the elderly person. It is actually available for, you know, occupation and use, or even rental by the owner. So that's a pretty good deal. You're going to pay more for that. Your monthly annuity is going to be more for a viager libre, but at least you have the availability of it. So it's pretty cool. And I don't necessarily recommend this, but I will tell you that I owned a Viager. I know Brian knows all about the one I had. It's a story that I've written 10 chapters about. I intend for this to be a book at some point because I went through 5 years of my life trying to deal with this property. But what happened was I discovered this apartment in my own building. And the Viager, the elderly man, was no longer living there. And I decided I wanted to buy it, but it wasn't in his hands. It was in the hands of the state because the heirs didn't want to pay the taxes on it. And so it went into the hands of the state, even though he still held the rights of usage. So I spent 2 years negotiating with the state, came up with a great price, bought it. There were elements to this property that I never actually even saw. I mean, there was a chambre de bain and a débarras and a cave and all sorts of things that I had no keys to, but I bought it literally sight unseen after spending 2 years negotiating with the state. Once I did that, I owned it, but of course I still had no rights to it. And I spent the next 2 years trying to find the old man, okay? And I actually ended up taking a trip to near Bordeaux and found his nephew. I ended up negotiating with the nephew and buying the rights of usage. So now after 4 years, I had what was considered a viager libre. In effect, it was mine. And that was the end of that. The old man did die a few years later, and I got a notice about it. But in the meantime, I spent a year renovating it. It was, I was 3 contractors. I had a bit of a hell situation. It ended up becoming a fantastic property. It was an amazing rental until the rental laws kicked in Paris and then made it not so viable for me. But I will tell you that when I did go to sell it, I sold it in 10 minutes. I sold it for 3 times what I paid for it as a viager and double what I had in it in its entirety. And so in the end, it was really worth it, but I still miss it. It was quite a project. So that's my experience with the Viager.
See,
and Patty, I think I also, there's a link to another, you can, if there's a link to my stories, if anybody wants to read my 10 chapters about my 5-year saga with this crazy piece of property. It was an apartment with a terrace and a skylight in my own building and an elevator. And I thought I was going to become my own viager in it, but that didn't happen. C'est la vie.
So I'll jump in a little bit on there from the financial planning side of viager. If you're selling the viager instead of buying the viager, it can become more of a cash flow instrument. So these are great positions to be in if, for instance, you don't have children or a defined heir, but you want a higher income during your living years. All of a sudden, and the example I'm going to use is, it looks more like what we would consider an annuitized annuity in the States, where you're getting a monthly income, but the minute you pass away, that's gone. It's not part of your estate anymore. That's different from that US convention, or the question was asked in the chat, of what's the difference between this and a reverse mortgage. In a reverse mortgage, you still own the property. You're just getting a little bit of the liquidity for each year. So in Adrian's situations, you get to 118 or 122, and all of a sudden you're not you're not getting that income anymore because it's run out of principal. But on the viager, pays off forever.
If you're the viager, then it's brilliant. I mean, if you don't have heirs, let's face it, you've invested in this property, so it's really a brilliant idea from the owner's, from selling as a viager point of view. Because then, you've increased your income, you still have your place to live, and then you don't even have to worry about, what you're leaving to anyone later. It's a done deal. I will tell you one other caveat, okay? I tried to find out what the health of my viager was, okay? What the health of the elderly man was, to determine how long I was going to have to wait, but that's illegal to do. Yeah. So I I didn't succeed.
I'm going to jump in here because we don't have much time left and we have some amazing questions in there. So I'm going to really dig not too deep into the assurance vie, but I'm going to cover a couple questions if you don't mind, Adrian,
Okay.
that are even better than what I had as topics. Eric asked a question about how trusts are considered in France. And this is something that, it's funny. I've known you for so long, Adrian, that I remember this not being in the law. But in 2011, basically, France made it very easy to interpret that they don't like trusts. They never liked them before because they're not part of civil law, but that even if you have a revocable trust back in the United States, you will have to do some erroneous filings in France. And essentially, that means you're just going to be spending a lot more time with Benjamin. And I can assure you it's more fun to have a glass of wine or a beer with him than it is to go through a trust filing. In that sense. So if you built your estate plan back in the States using a typical revocable trust where it's a pass-through, well, you'll be taxed the exact same way when you're in France. You'll have to do additional filings. Did I miss anything there, Benjamin?
Yeah, it's exactly that. But there is a difference between the trust between France and the US, not on the inheritance, but on the time when you have a trust. Like, let's say you have a trust in the US, you move to France. For every year you're in France, you need to do a trust declaration in France, because the French tax authority wants to know what do you have on your trust and what is the value of your trust. And by not doing so, there is a high penalty on that. I think it's 20,000 euros by not declaring a trust in France. So even if you're not beneficiating of the trust of the property you have on the trust, for example, you need to do a specific tax form on that every year.
Absolutely. I'm going to do a follow-up, which is gifting to children on the American side. Martine had a great question about gifting to Utmas. And this is kind of a follow-up, and I'd love to hear Ben's perspective because I actually haven't ever talked to you about this. Well, an Utma is a Uniform Trust to Minors Act, which is very typical in the States of setting it up to where essentially the child becomes the true owner of it once they reach the age of majority. I've tried to avoid these types of situations and instead maybe doing an Utma for the child, but using a US resident as the custodian instead of a French resident as the custodian. To avoid the interpretation of the French of it being a trust, number one, and number two, Utmas are state registered. So France is not a state of the United States. So therefore, it doesn't really fall into that convention. So we've been using them on that side for those gifts to any minors. I've rendered everybody silent. See, we're all still astonished that we did this whole presentation and Adrian figured out if we move to France, we'll end up living till we're 120, so we don't have to worry about this.
Well, okay, so this is part of it, Brian, because, you know, we live a very healthy life, and I'm absolutely certain that I'm going to live a hell of a lot longer than I would have if I'd stayed in the States. But thank goodness I'm doing some estate planning right now that I didn't think of before.
Absolutely. I'll touch on one of the estate planning functions that is really great for non-Americans, and then I'll touch on some of the reasons why you're not hearing us pitch it and pitch it and pitch it. So in French, assurance vie literally means life insurance. Now, these types of life insurances are more like variable annuities back in the United States. And what's nice about them is that you can set up an assurance vie for every single one of your children for 152,500 euros. And that comes out estate tax free. For other heirs, there's a whole set of charts. Benjamin will break out those charts for us if we want them.
Please not.
I'm teasing. But the importance is you reduce your estate taxes significantly. Now, the one thing that you need to know is you can't do these contracts after you turn 70 years old. So there is that timeline on them. Now, why are we not pushing them to our young, healthy clients like Adrian? Well, several reasons. One of them, they're expensive. Everything in France is a little bit more expensive, and investments are definitely the case. So when you're building an insurance wrapper that has to have investments inside of them and management cross-border, all of a sudden you're tripling your fees, and that can negate some of those gains that you're getting from the lower estate tax if you're compounding them over a long period of time. If you find out you have cancer and you got 6 months to live, everything changes. Definitely, this is a way to go. If you're young and healthy, 20, 30 years later, you've paid more in fees than you saved in taxes, i.e., this is why we wouldn't go that direction. The more important one is that most all of the investments that go in these assurance vie vehicles end up being what are considered PFICs, passive foreign investment companies. If you're not aware what those are, basically, they're Jonathan's nightmare. So now we've got videos on PFICs. We've talked about them in lots of the other presentations, so you can see all those in the playlist. But basically, you want to avoid PFICs. So that means you can only place 3 things in there: cash/savings in there. And as you all know, interest rates in Europe are horrendously low. So basically, you're going to get very little interest, and that's well under the inflation rate. Individual securities or US ETFs. Now, most of the assurance vie carriers that are cheaper don't allow the US ETFs or individual securities. So now we're having to go to some of the boutique players. And again, we're going up and up in the fees. So in other words, if you found out that you're terminally ill and you need to avoid some of these estate taxes, if you're coming up on 70, it's worth having a conversation, but it's not the total fix to everything. So that's what I'll say about the assurance vie. Now, Jonathan and I, we did a fun webinar a little while ago on charitable giving.
Yes.
And we had a blast on this. And so I'm going to use my last minute before we pass it over to Patty to give us some more of the Q&A. Charitable gifting is covered in the double taxation agreement for estate taxes between the US and France. It's a nice old one. It's from back in the 1970s, but we found an old copy, and we dug it out, and it covers those charitable gifts. But the charitable gifts have to be in the country that you reside in, correct, Jonathan?
Exactly.
So let's just say you built a will back in the United States and you said, I'm going to give all my money to whatever local charity it might be, or say your local church or anything, any of those 501(c)(3)s. That might be a problem according to estate taxes, because it should be a conforming charity in France.
Yeah. That's why it's so important, Brian, to review and continually review your will and your estate planning, especially, again, if you set it up while you're sitting in Arizona and now you're sitting in Arles or Paris or wherever in France, you've got to look at it. You've got a whole different kettle of fish now on your hands. So you have to make sure that you have the right people in place to help you with that kettle of fish that you have, and not just because, as Brian said, if we were in the US, we would just tell Adrian, set up a revocable living trust, and Brian and I would high five each other and be like, wow, this is great planning for Adrian, but not in France.
So the trick is that before I die, I should move back to the States.
No, not necessarily. for all the people on this call that are still in the United States and they haven't moved to France just yet, they basically want to contact us before they move over. If they have charitable intents, they might be able to use a donor advised fund or the such, which is what we talked about. And Jonathan dug deep into some of the taxable strategies of lumping up multiple years, which is wonderful. I'll let you go back to those videos instead of us reiterating them here. If you're already in France, it might mean that you need to change your strategy. So sometimes if charitable gifting is involved, you might use one of the bigger overlying charities to go ahead and gift to the organizations that you're passionate about. We had one that we had to change, that they were going to give it to a water conservatory, but not the one that they originally wanted to give it to, just so that it would conform with French law. So it's digging into it and making sure that you dot the I's and cross the T's.
Okay, so are you ready to like open up just for a couple of questions? We only have a few minutes.
I think that's what we should do.
Okay, Patty, you're in charge. You're muted.
I am muted. Okay, it helps if I unmute. Okay, a question from Deborah James. It's a very basic question. What makes you a French tax resident?
We can all answer that.
What's the answer?
183 days of residence is your basic tax residency, except there are exceptions because not everyone spends 183 days anywhere. So it's where you consider home. Is that correct, you guys?
You
Yeah.
listen to us, Adrian.
I've been around the block.
There you go.
Even more so, when the deeper we dig into it, it becomes intent, right? Where you lay your head and where you do your work can be the intent of staying someplace, even whether it be over or under that 183 days. And that's where that argument becomes.
It's going to get more complicated the more transient we become, however.
100%. And that's why the intent word to me is the
Right.
important word to really think about when it comes to when do you become resident.
Okay, Patty, new question.
Okay, a question from Al Toronto. How are 401ks and IRAs handled from a French inheritance perspective?
That's a good question.
That's a good question.
We'll go back to all of Benjamin's graphs of all the percentages.
Fair enough.
So, well, I'll tackle the first part and then I'll let Benjamin fill in the second part,
Okay.
unless Jonathan has anything to add on there. The beneficiaries are predetermined inside of a 401k or an IRA. So you can actually elect your beneficiaries. And now with the Brussels IV Amendment to estate taxes through Europe, you can actually use that to bypass the Napoleonic law. Yes, he lost the war, but somehow they still have laws based on him, that has forced heirship. So if all of a sudden you're giving the money to your brother instead of your kids, well, you can do so because it's in the American elective under that Brussels IV Amendment. That being said, it's still fully taxed in France. So it's taxed just as if it was an asset that's sitting in France. And therefore, you want to be careful about who you're gifting it to, because you gift it to a friend and you might get yourself really stung to where your friend is not thinking that that was a good gift.
But you're dead.
Absolutely.
As Adrian, I think Adrian said it earlier, but you're dead. So
You don't care.
you don't right. Oh gosh. Okay, so this might be a question for Adrian, but it could be for Brian. I don't know. And maybe you don't want to answer. What structure did Adrian decide on for giving her property to her daughter?
Oh, I can answer that.
Okay. It's a good question.
Because, well, okay, so I've got a couple of different properties, but basically, I think we determined that it was less expensive overall for me to transfer the title to her in some fashion, because I would pay the notarial taxes and fees on the current value of the property, but in the end, it would be a lot less expensive than the inheritance taxes she would pay, since I've owned the property for such a long time and it's increased in so much value. Is that correct, Brian? That's what we decided?
Exactly.
Right. So that is an option. Now, I have to tell you, though, that when I bought these properties, I did speak to attorneys who gave me very bad advice. But I was young and the properties weren't that valuable at the time. And so, you know, when you're 40 or 45 years old and the property's just is worth 1/5 of what it is today, it didn't seem like that big of a deal. And who would have dreamt that I would have been in the same apartment for 25 years? I mean, you know, you just, didn't see it coming.
Who knew?
The only thing I'd correct in there is that, Adrian, you're still young.
Well, of course, in my head. It's the hour, so we're actually done. Brian?
Well-
Can we just do one follow-up on Al's question about the 401k and IRA question?
Mhm.
He's asking, even if the beneficiaries are in the US, is your answer correct?
Yes.
Yes.
So,
And I would like to make one other comment, and that is that if you buy property in France and you are not tax resident in France, you can choose US law for the purposes of bequeathing the asset, but that does not change the taxation.
absolutely.
Okay, that's just because I know that that would be another question, especially for people who own property here but aren't living here full time. And on that note, so we've got lots of questions here. We're going to have, but this has been recorded for those who didn't realize that from the beginning. We can make this, or we can try to answer some of these questions, right, in our own.
Yep.
I can try to answer some of these questions in follow-up newsletters, for example.
Yeah.
And the best way to actually deal with your questions is to talk to us on an individual basis with your individual problems and get them sorted out. And I can tell you that this is a complicated subject. We probably need 3 more days to actually talk about it in total. And so it's worthwhile. These are the best advisors you can have. They've really helped me tremendously. They're brilliant at what they do. And I highly recommend that everybody out there think about this in advance of making your move over if you can. And if you can't do it in advance, you're already into the middle of it, then they'll figure out a way out. So thanks to everybody for participating. Our next forum is on November 16th. So put that date in your calendar. We will be promoting it in advance. And if you have any questions for any of us, you can write me at info@adrianleeds.com or Brian, right? What's your contact info?
Brian@dunhillfinancial.com.
Okay, there you go.
Everybody's going to get a follow-up email, though, that's going to have all of our contact details so that you can also get Ben and Jonathan and the tax
And a
information.
link to the recording, correct?
Absolutely.
Right. And all of you guys are listed on my webpage, on my website, under financial planning, and that's what you can find them in there as well. So thank you all. Have a wonderful rest of the evening and week, and we'll see you again soon.
Great. Thank you, everybody.
Thanks, everybody.
Bye.
Benjamin, Patty,
Bye.
Jonathan, talk to you soon. All the best.